This is Frank Fortunato with a broadcast of CATEX TV from Princeton, New Jersey. Reliable news for the risk industry. Today is Tuesday, July 12, 2011. We have some breaking news that's being reported by Insurance Insider, as usual. Amwins, the American wholesale broker, is in advanced stages of takeover negotiations with London broker Thompson, Heath & Bond, better known as THB. According to sources, Amwins is poised to make a formal approach for THB as a result of talks that have been going on for a number of weeks. Amwins is being advised by Macquarie. In the last 12 months, up to the last day of October 2010, THB had fees and commissions of about £48.5 million. The largest shareholder of THB is Vic Thompson. He's got about 13.5%. The next largest shareholder is the THB CEO, Frank Murphy, who has 3.45%. THB is a relatively small London broker in the scheme of things and delivered slim profits in each of the last 2 years. Pre-tax profits in 08 to 09 were about £600,000. So we'll keep an eye on that. That's an interesting role reversal, a big U.S. wholesaler coming into the London broker market. We'll report more on that tomorrow if there's more news. In the United States, the brinksmanship continues. President Obama versus the House Republicans. The president has agreed to a $4 trillion budget-cutting proposal, of which $1 trillion of that will be phased in as new revenue, i.e. taxes, by closing loopholes for oil companies and hedge fund managers. The Republicans can't accept it. The United States ticks onward towards a possible budget default. I think it's pretty clear to all viewers at this point as to who would be to blame in the event of such a catastrophe occurring. Meanwhile, in Europe, economic turmoil is roiling across the continent, best symbolized by what's going on with the cost of Italian debt. Italy's borrowing costs broke above 6% for the first time in 14 years as the Eurozone's third largest economy was sucked into the European debt crisis. Italian 10-year yields at one stage soared more than 30 basis points to leap above 6%, the highest since 1997. They're getting closer to the 7% level that most analysts see as being unsustainable for Italy's borrowing costs given its huge amount of debt. The cost of insuring Italian debt against default rose as prolonged efforts to agree to another bailout for Greece eroded investor confidence in policymakers' ability to hold the EU together. Analysts say that confusion over the Italian deficit-cutting plan make it an easy target for those looking to hedge against the sustainability of the euro. So the Italians are in some ways paying for Greece's problems. Meanwhile, in the Sinai Peninsula, gunmen have blown up a terminal of the Egyptian natural gas pipeline that supplies both Israel and Jordan with natural gas. The explosion occurred east of El Arish, a city in the Sinai Peninsula located about 30 miles from the Israeli border. Flames could be seen up to 15 miles away. No one has claimed responsibility. The pipeline supplies 40% of Israel's gas consumption. In the United States, Alterra Capital Holdings down in Bermuda has offloaded its American Binding Authority division to Selective Insurance Group. Selective is located here in New Jersey. The portfolio is being sold to Selective, produced $77 million of aggregate gross premiums last year in 2010. The deal sees Selective taking on the commercial excess and specialty lines business written under contract binding authority by Alterra's excess and surpluses general agents. The specialty personal lines business written by Alterra is not part of the deal. Argo is coming in. They're the latest. They're estimating net losses of between 30 and 35 million from the American tornadoes in April and May. However, investors will be encouraged by news that Argo is holding its first quarter cat loss estimate firm at 113 million. A number of Argo's rivals have recently disclosed a deterioration in the claims picture from the New Zealand and Japanese quakes. Argo did not. Earthquakes are notorious, quote, for loss creep, and insurers will be monitoring the situation very closely. Kudos to Bradley Kading, the head of the Association of Bermuda Insurers and Reinsurers. This is a coup. Two former American trade representatives have backed the Bermuda insurance industry's opposition to changes that would impose extra taxes on non-U.S. insurance groups. Mickey Cantor from the Clinton administration, who was the U.S. Trade Representative, and Susan Schwab from the second George Bush administration, who was the U.S. Trade Representative, jointly authored a letter to the Subcommittee on Select Revenue, arguing that the proposed tax increases would violate world trade rules. The letter was dated July 5th. It was addressed to the subcommittee chairman and ranking member. The ranking member is Richard Neal. The tax increase proposals that the two were complaining about were originally included in the Neal bill, which has received little support in Congress and remained on the back burner. However, some of the provisions of the Neal bill appeared in President Obama's 2012 budget plan. In Australia, the insurer Wesfarmers has almost doubled its reinsurance excess of loss program for Australia and New Zealand. And why not, given what's been going on there? The event limit for the company's property catastrophe excess of loss programs has been increased to 750 million Australian dollars from 400 million. Net retention limits increased from 10 million to 30 million in Australia and up to 20 million in New Zealand. Wesfarmers Managing Director Rob Scott said reinsurers pushed for price increases and higher retention levels following the heavy losses in the region in late 2010 and earlier this year. And it's that time of year again, coming out of Munich, the annual Munich Re catastrophe study. The total costs associated with natural catastrophes will reach a record this year. This is after an earthquake in Japan pushed first half losses up to $265 billion. Munich Re, the world's biggest reinsurer by revenue, said this morning that the earthquake, which hit Japan with a magnitude of 9.0 on March 11th, was the most expensive natural catastrophe on record in terms of economic losses. It cost about $210 billion, more than the $125 billion of economic losses caused by Hurricane Katrina. However, in terms of insured losses, it was only $30 billion. The Japanese earthquake remained far below the Katrina level. In Russia, a passenger plane caught fire and crash landed in the Siberian River last night, killing at least 6 people. Prompts fresh concerns about the safety of Russia's aging Soviet-era aircraft fleet. Mechanical failure in the left engine of an Antonov 24 appeared to be the most likely cause of the crash, which occurred in the Tomsk region of western Siberia. About 30 people survived the crash. Russian officials say that the engine began to break up in flight. The pilot then tried to make an emergency landing in the Ob River. The Ob River is frozen 9 months of the year. Perhaps if it had been another time of year than the height of summer, he would have easily been able to have landed on the ice. That's all the news for today. If we have any breaking news, we'll come back and tell you. If not, thank you for watching, and we'll see you tomorrow.